Good day, Market Chameleons and everyone joining for the first time. Thanks for coming by and checking out the Market Chameleon webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. With that, let's take one last look at this disclaimer and welcome Dimitri Pargamonik to the stage. We'll be talking about how to analyze stock price returns around historical earnings date. With that, how you doing, Dima?
Good morning, Will. How are you?
Great. Do you want to share your screen?
Yep. Oh, yeah. One sec. I thought I had that up. Good morning, everyone. And let me know once you have it up there, Will.
Yep, there it is.
Good morning, everyone. And today we're going to take a tool and see how we could use that tool to change parameters and get insights around a particular stock around its earnings announcements. So I'm going to let's navigate to the tool. So up on the top menu under stocks, we're going to go over here under tools, price action analysis, and click on that, and brings us to this page. I'm just going to click here to minimize that message. And what we're going to do is type in a stock symbol, okay? And then we're going to try to get insights around how that stock performed anchored to a catalyst event, which is earnings in this situation. So let's first type in a symbol, and we'll use Tesla. I'm going to go under symbols. I'm going to go Tesla, and then we're going to change this calculator to using this drop down to show us historical returns around the catalyst event. Okay, so we're going to use this one, intervals around a catalyst. So when you click that, okay, it allows us to select the catalyst with this drop down, but we're going to stay on the earnings dates. And now that we set this up, the next parameter it asks us to fill out is what date range around this catalyst are we looking to perform an analysis. So since we have this earnings date, this calculator is going to go and retrieve those earnings dates. We want to know, well, what is the start time and end time that we're trying to calculate the returns for. So we could look at before the earnings, after the earnings, this drop down, and set the amount of days before or after. So in our example, let's say we're looking for a historical run up into the earnings. How did the stock perform? We're going to take out maybe that earnings announcement date itself, but see how the stock tended to perform heading into the earnings, because we know that earnings dates are usually known ahead of time, right? So the company will announce we're gonna report our earnings on so and so. Well, because those are announced ahead of time, traders start to reposition, hedge, and express their opinion heading into that earnings. So we will see a pickup in trading activity and volume heading into that earnings announcement. But how does that affect the stock behavior usually, right? That's what we're going to see. Look, how does the stock behave? So let's say we're looking at a stock, and we'll leave this at 5 days, starting 5 days before. And let's say we want to do, let's say, 1 day before the event. Okay, so now what we're doing is looking at a period starting before, 5 days before, 5 trading days, and ending the day before the event to get an idea of how did Tesla perform. And we also over here have the option to set the number of years we're going back. This is 4 years. So let's leave it at that. And then we're going to say get results. Click on that. And now we have these statistics for us, the historical performance, and all this data that it provided to us based on the parameters we set in the calculator. So let's just go over it really quickly, and we see that in the last 4 years, 38% of those returns around that period were positive, 63 were negative. Okay, and here are the historical performance. So we could see here the greens were positive, the reds were negative. And keep in mind the way we set this calculator, it's not it's looking at returns prior to that announcement. Okay, so you could see here that more often it actually was down on the that period than it was up. It also shows us what is the average returns and median. So the average of all those returns was negative 0.76%, 0.75%. And the median, where half the returns are higher, half the returns were lower, was negative 2.38%. Okay, so it had somewhat of a negative skew. If we separated them out, just positive returns and then just negative returns, okay, we analyzed those separately. We see the average of all the positive returns was plus 5.38. The average of all the negative returns was negative 4.4. So very close together, maybe a slight skew that when it was up, on average, it was up by more than the average down moves, but the average down moves were more frequent. And then if we took the extreme moves, right, which were the biggest move to the upside, the biggest move to the downside, we see that the largest move to the upside was 13.6. The largest move to the downside was 6.9. So actually, we see that was skewed to the upside. In other words, it could have a violent move up or down, and in this situation, the violent move to the upside was greater than the one to the downside. If we could look back up here. So this shows us the chart of it. This shows the progression because we've selected days. So 5 days before, 1 day before. So this takes the average of them and just shows us the progression. And this is the median of how the stock moved between those dates. If we wanted to come down here, this shows us, this is the earnings date. This is showing us the dates that it measures, end of day July 17th to end of day July 23rd. The stock was up 4.1%. Here's the previous earnings, April 22nd. So using it end of date April 15th and end of date April 22nd, the stock was down 6.4%. So this shows us the data used in the analysis, the average return, and how we got those figures. Okay. This, again, gives us the summary stats here. And it also gives us the absolute moves. Okay. Let me see if the absolute... No, so this gives us the absolute moves, which takes all the moves, all these moves, converts them to positive numbers and takes the average. So this way we get the average magnitude, right? So here's a negative 6.9, right? Well, if we take a negative 6.9 and, add it to positive 5.8, you'll get, negative, less than 1. You're getting close to 0. But if we convert them all to positive and take the average, then, the average, you'll get closer to 6%, which is what the absolute is trying to do, see the magnitude of the move either way. Okay, so that's what this is absolute. So the positives, the absolute move is 5.3. if we take only the negatives, the absolute move was 4.4, and if we take all of them, it was 4.79. Okay. These are the top negative returns, top positive returns in order. So you can see that this calculator really quickly allows us to change these parameters around to get quick insights on how that stock moved. And if we want to see, well, let's say we want to see how this measured up to the S&P 500 at the same time. Okay, we could put that in here, SPY, for example. Click on that. So now what it does is show us side by side for that same time period, Tesla and SPY. So we could see here that for that same time period, Tesla actually underperformed the market, right? So these down drafts were not due to, the market conditions that well, Tesla was down 63% of the time and SPY was down 63% of the time, that we could kind of explain it away due to market conditions of that period, right? So it's, maybe the total markets were down and sympathy was going down with it, but that's not what the data shows us, because for that same time period you could see side by side, could see it better here, right? Tesla return between July 17th, July 23rd, and SPY. So you can see that SPY outperformed the Tesla in that same time period. So whatever these downtrend, the pressure to the downside doesn't appear to be due to the conditions and systemic conditions in the market. Overall, we could see how Tesla for that same time period lost 0.75%, while SPY for that same time period gained 0.48%. Okay, so it definitely underperformed heading into the earnings. While nobody knew what was the earnings reaction would be, it did underperform in those last 4 years. So I'm gonna stop right there. I wanted to show a quick example of how to use this calculator to change the parameters around, run your analysis, and read through the different data and analytics.
Yeah, that's a great tool, D. We did have a question from Rob. I didn't want to interrupt the webinar. He asks, Will, would you please ask Dimitri if the standard deviation on the options chart show the move as it would happen if earnings are included or not?
Wait, say that again?
Rob asks, the standard deviation on the options chart, I'm assuming this is a different tool on the site he's referencing, show the move as it would happen if earnings are included or not. I guess are earnings included in the standard deviation move analysis or calculation?
Okay, I think you might be referring to a different tool. I'm looking through maybe this standard. I'm not sure, which tool you're looking, because you reference an options chart, but this tool itself here only looks at stock returns, prices. So I'd have to find the tool maybe that Rob's referring to, just so I have a reference.
Yeah, Rob, if you screenshot the tool you're referencing, or the page you're referencing, send it to me. I'll put it in front of Dimitri. Maybe we'll answer it on another show.
Yeah.
Thanks for the question, for sure. Great job, D. Thanks for showing us how to use that tool. It's really a great process. Thanks so much, my friend. This is the last show of the week. Oh, sorry, D.
Yeah, I was just going to say thanks, Will. Thanks, everyone, for joining. Stay safe out there. Have a great weekend. Have a great trading day. Hope to see you on Monday.
Great. Great job, D. Great show. We will see you on Monday. Have a safe trading day, my friend. Bye.
Bye.
All right, everyone. Thanks for joining for another webinar series. Remember to like and follow us on all of the platforms. Remember, Rob, email me that screenshot of where you're seeing that standard deviation. I will get that in front of D. For those who have not checked out Market Chameleon before, make sure you click on the page where you go to the landing page. I think you can see it there, and you can go to this spot right here, the free trial. Click on that and access a 7-day free trial. Always super helpful to the Chameleon community, to us if you do that. Thanks for joining us today. Remember, follow us. If you're on YouTube, the thumbs up, always appreciated. Everyone have a safe trading day, and we'll see you on Monday.